Okay, so in this video blog, I'm going to be talking about the closed trades for January, February, and then up through the 5th of March of 2017. And again, this is going to be a slightly different format. We'll be showing the S&P Crusher V2 performance and also the swing trader. The swing trader for the year so far has done really amazing. It's actually up about 29.8%, and that's per 15,000 traded. And then the S&P Crusher is up about 10% per 30K traded. I just want to remind everyone that trading futures and options does involve substantial risk of loss, and of course past performance is not indicative of future performance. Okay, so first I'd like to just go over our disclaimer, and if you've seen the video blogs, then you've heard this 100 times, but we are a third-party trading system developer. We're not a registered CTA. We do not control client accounts, so we offer our trading systems to be licensed for their use, and just keep in mind that everything that we show on this video is going to consist of, we might mention back tested, we might mention walk forward, and we might mention live. So in the cases of the live trades, past performance is not indicative of future performance. And in the case of the back tested, just refer to the back tested disclaimers on our website, but they have the benefit of hindsight. And in this video, I don't think we'll talk about back tested, so we don't have the disclaimer here. But just remember that this is not for everyone, but we do offer algorithms for use in the futures market. And with that, I'll get on to the performance for the period that we're going to be analyzing. Alright, so the swing trader system, it trades 2 algorithms out of the 7 that we offer. It trades the swing trade ES, also called the bullfire, also called the momentum algorithm, and then it also trades the swing trade TY, which we used to call that the push-pull algorithm. These 2 algorithms, though, have traded live in accounts since October 2015, so they've traded live for quite a while now. They traded in other packages, and now they trade in their own package called the swing trader. They have traded live in accounts since October 2015, but we recently started offering them as a standalone system, and for the year so far, it's up about 4,470 per 15K traded, and so on a percent basis, that's about 29.8%. So far for the year, it's had 20 trades, and the percent profitable have been 80%. And the drawdown that it's seen in this period was about $1,800, and you can see that on the equity curve right here when we got stopped out of 2 back-to-back ES trades. And I want to also mention just to refer to our website for the max drawdown since going live, because this drawdown is only for the period that we reviewed, which is from January 1st, which is kind of the end of the last blog we did until now. So there has been a kind of a gap in some of the blogs that we've been doing, but I wanted to put one together to show kind of the performance since the last blog that we did and go over all the trades. And like I said, the swing trader has done really well. The S&P Crusher, just so you know, started out a little bit kind of up and down sideways, but then recently has done pretty well, and so it's actually up about 10%, like I mentioned. But first, I'm going to talk about the swing trader, and then we'll talk about the S&P Crusher. So again, the swing trader trades 2 of the 7 algorithms that we offer, and then the S&P Crusher trades all 7. So the trades that I review right now in the swing trader are also traded in the Crusher, and then when I talk about the Crusher, I'll talk about the other 5 algorithms that this one doesn't trade. So with that, let me go ahead and go to the trade list, and like I said, this is the equity curve just for this period analyzed, and as you can see, it looks really good, and I'll talk about each trade, and we'll go over kind of why it's done so well. Alright, so here's the complete trade list for all the trades that are in the swing trade, or the swing trade ES and the swing trade TY. You'll see the majority of them are the ES, and then you'll see these two on the bottom here, which are the TY and a rollover, which I'll talk about what that is. But this includes open trade equity as of the 3rd, which is Friday. Today's Sunday, so as of the 3rd, this includes the open trade equity, but like we said, it's up about 4,470 per 15K traded, so it's done really well. But let's go ahead and look at the chart, and I'll kind of show you why. So what you're looking at here is a chart of the S&P 500, and over here is a chart of the 10-year note. These are the two futures that this algorithm trades. And the reason why we trade these two is because they are the most liquid, two of the most liquid futures instruments traded. So we always look to trade, we prefer to trade only the ES and the TY. Now, we used to trade the NQ, but we capped those a while ago, primarily due to it hitting its kind of max capacity. But if you look here, so here's kind of the start of the year, and if you saw the previous blog, we talked about this trade here where we got stopped out. But what happened was, after we got stopped out of that trade, it did get back in, and it had a huge trade where we went long, and we kind of rode this snapback rally. Let me kind of go over a little bit so you can see it more. But we got in long here, and we held on to that trade and got out when it hit its profit target up here. So that trade alone was pretty huge. It was about a $2,000 gain. Then we got stopped out of this trade here. This red line shows us getting out of the trade with a loss. And then we jumped back in on the 11th of January and got stopped out of that one. Then we got back in on the 12th and hit our target here. Then we got back in, hit our target here. And then then the market just really started rallying, and we had I guess we had 1, 2, 3, 4 winning trades in a row. Then we took a loss here, and then as I kind of move over, you'll see that throughout this entire rally, we had numerous winning trades. So we had 1, 2, 3, 4, 5, 6, 7. And then 8, and then the current trade we're in right now is up. So we had about 8 winning trades in a row, and that's really what helped this algorithm do so well. So this algorithm will typically do really well when the market is going higher. It usually also does pretty good when it goes sideways, although it's a little bit trickier because you have more up and down where we could get stopped out. But the bottom line, though, is this algorithm did amazing, and it really helped with some of the gains that we saw. So if the market starts going sideways, we still expect this algorithm to do well, and because it has pretty tight targets. So hopefully we get out of this trade with a win. Like I said, it's up now, and as the market starts going sideways and then rolls over, it'll get on the sideline, kind of like it did over here and over here, or that's how what it's designed to do. But it did take advantage of the up move that was seen, and even though probably most traders didn't really think that the market would keep going higher, because we trade algorithms, we just let it run, and it took advantage of those of the rally that we saw. So let me go back to the foil that I have here. Okay, and so I made it a little bit bigger, but so if you kind of look at the trades here, so this first one that had a really nice gain, that was that very first trade I showed you. Then here's those two that we got stopped out of, and you'll see this kind of the sequence of a bunch of winning trades. The other trade I want to talk about, though, is the TY that it had. So the TY, it did finally kind of get back into a trade on the 6th of January. So we bought the 10-year note on this pullback, and we saw a lot of up and down, and that's always frustrating because you see it in a profit, and then it goes to a loss, and then a profit, then a loss, then a profit. Well, what happened is, because we were in it for so many weeks, the TY actually rolls over quite a bit earlier than the ES. So even though this chart doesn't show it, we actually sold the TY on, I believe it was the 27th. We did a rollover, and so what we do is we mark that as a profit of what we sold it at. But I wanted to, usually we don't show the open trade equity, but for this I did, because I wanted to show that we're not hiding anything, that we sold it, but then we got back in immediately. But we bought in on the the June contract. So this one was the March contract. So we sell it, and then we get right back in pretty much at the same time. And because we sold it at a profit, I just wanted to capture that we do have a loss on it from the rollover point, which would have been on the 27th. So it would have been right in here. So it rolled over at a good time. I mean, because we sold it and we were able to lock in the profit there. But then we get back in and it's sold off. So it's currently down, and we'll see what happens if it goes back up. But this trade though is really the one that we expect, and there's no guarantees. But if the S&P rolls over, which eventually it will, then the expectation is that the 10-year will rally, and so. That's kind of our bear market algorithm, the one that we expect to do well if the S&P goes lower. And so right now, if you look at our original entry, it's really just down a little bit from there. So it's pretty much break even. Now anyone that joined in this period has not bought into the TY, although because in this case though, at least the auto execution brokers bought them in because it was below our original entry. And so but yeah, so that's the TY trade. And overall, if we go back to the trade list, you can see that this swing trade algorithm has done really well. And if you want to learn more about this algorithm, I'm putting out a video real soon, probably the same day we release this video. It's going to talk about the swing trader and just the entire history of it since it went live. But this package was put together because some people don't want to trade options, and it really consists of the two best performing algorithms that we've had since going live. But now I'd also like to talk about the S&P Crusher. So let me get to that. Okay, so with the S&P Crusher, here's the equity curve for the period we're looking at, which is from the time of my last blog until now, the 5th of March 2017. And again, just to review, the S&P Crusher trades all 7 algorithms. It trades swing trade ES, swing trade TY, which I've already talked about those. It also trades the covered call, iron condor, and then 3 day trade algorithms: the gap short, day trade long, and day trade short. So far in this period, it's done okay. It's up about 3,100 per 30K traded, which is about 10%. It's had about 62 trades, and they're about 66 profitability. And then the drawdown for this period has been 2,390. And again, that's for this period only. You'd want to refer to the website for the max drawdown since going live, which is about, I believe, about 29% on a closing trade to closing trade in the back testing. So here's the equity curve though, and you can see that it kind of went sideways for a while with the 30K account. It had some good trades, but then because it trades some of these other algorithms, in particular the covered call and the iron condor, it did take more losses because those algorithms are really designed more for sideways / down moving markets. And because the market rallied so strongly, we took some losses on some of those trades. But it still is up, and so it's overall, for the year at least, it's done pretty well. But I'd like to kind of go over the trade list now, and then what we'll do is I'll show you some of the trades from the S&P Crusher. All right, so since this algorithm trades this system trades 7 algorithms, there's quite a few more trades that we have to go over. So I'm going to try to go over it quickly, but just remember that the swing trade ES and the swing trade TY are the same trades that I just went over. So I'll cover the iron condors, the covered calls, and then the 3 day trade algorithms. But to get all the trades, I had to break it down into 3 pages, so feel free to pause each page if you want to look closer at this trade list. And then we also have this on the website, so all this data is on the website and you'll be able to see it. The only difference is the website, I don't believe we include the open trade equity, and you'll see here it's the same open trade equity as the swing trader, the TY and then the ES. But let me now go to the chart and we'll kind of walk through some of the trades. So we already talked about the swing trade ES, which is this chart up here, and we already talked about the 10-year note, which is this one here. This one in the middle is the iron condor, and then these 3 on the right are the day trade algorithms. But this chart here also has the covered calls on it, so let me just kind of quickly go over some of those trades. And really the main reason why the S&P Crusher did a little bit, it didn't do as good as the swing trader. It was up 10% as opposed to about 30% on the swing trader. A lot of it's because of these covered calls that were placed. So whenever on the Crusher, it also sells calls against this long position that we take. And what that does is if the market is drifting sideways or higher, kind of like through here, it'll usually do pretty good. But if you get a really strong rally like this, then we take losses on the calls, but we take gains on the long side of the futures. And so what it really does is kind of cap the gains on every kind of leg higher. And so that's one reason why it didn't really do as well. And I don't think I need to go over every trade here. Some of them were really good. We had a few. Let's see. Probably this one here would have been fully profitable. Basically what we're looking at is we want it to close on Friday below this yellow line that you see here. So every Monday we sell a call if we're long the futures contract. And a few of them were okay. You know, even though here it closed, let's see, let me make sure. Yeah, so okay, so this is an example of one where we would have taken a bigger hit. We sold the call at $22.95, and I know it's hard to see, and then it closed probably right around $23.12. So we kind of take a loss on the short call, but then we have gains on the ES. So it really what it does is it just takes away from some of these gains that we saw. But that's the covered call. So if the market goes sideways here, which it might, or if it goes lower, then for sure the covered calls will be profitable because on Friday it'll close below the call that we sold. So it kind of gives us a buffer, and in case we're wrong. And then as long as it's just kind of a market drifting higher, then usually the covered calls will also be profitable. It's the really strong rally like you saw here that make the covered calls a little bit more difficult. On the iron condor, so this algorithm actually has been profitable through January, February, and March so far, even though we've had a strong rally. And it's I believe it's been profitable by about $710. So on a 30K account, that's a couple percent. But what I want to point out is that that's actually really good that the iron condors have been profitable in this period, even though we've had a pretty strong rally. And the reason why is because the iron condor also sells puts, and so when the market rallies like it has, the puts close 100% in the money. In fact, I think throughout this entire period, our puts were always 100% in the money, or out of the money, which means we kept the entire premium. But the calls, most of them did close above our strike price, and so they were some of those we took losses on. This last trade we had, there was a good example of where even though we were just barely wrong, we were still profitable because we kept all the premium on the put and then on the call we collected, I think, about 4 points of premium. So it really would have had to close above 23.84 for us to be at a loss on the call. So the iron condors did really well throughout this period. So the iron condors did good. The TY has been pretty much break even. The momentum ES was extremely profitable, and then the covered calls were at a loss. So the other thing I want to talk about, though, is the 3 day trade algorithms that the S&P Crusher also trades. Okay, so the morning gap, the gap short day trade algorithm, I'll have to look here, but I don't think it triggered. So this was, I believe, a half day, and so even though it shows this trade on the chart, the auto execution brokers don't take trades on half days because it's a half day. There's less volume, and so that's just one of the rules of the system. But it looks like it did have a winning trade on the 7th of February. And then looks like we had a losing trade over here on the 3rd of February. And then if I scroll back, you don't really see any more trades. So it really only had 2 trades, and I think it was pretty much break even for the period. So the morning gap did fine. Again, this is a short day trade algorithm, and so it's good that it was break even because the market has rallied so strongly. We, you know, as long as this algorithm is break even or just a small loss, then we consider that a win. The breakout day trade algorithm, that's this one here, it had a really good trade on the 1st of March where we bought right here 23.83 and got out at the close 23.94. So that was a really good trade. And then we had a few other good trades here that helped. So on the 10th of February we had a winning trade. On the 13th of February a winning trade. And then on the 7th we got stopped out of a trade here. And then yeah, on the 25th we also had a good trade. So overall I believe that the breakout day trade algorithm did really well. The short day trade algorithm, though, had, I think, 2 losers and 1 winner. So the bottom line is when you add up all 3 of these day trade algorithms, they were down just about 1%, like maybe about $300, I believe. So when you put it all together, though, overall, the S&P Crusher, even though there was a lot of ups and downs, it did pretty well in the end in this period that we've looked at. If somebody had started on the 1st of January with 30K, they would be up about 10% right now. Now, and that's with 62 trades. Now, again, the swing trader did quite a bit better. And because it only trades 2 algorithms, it trades on $15,000 increments. And so it did 4,470 per 15K traded, which is about 29%. So this algorithm has definitely been kind of the highlight of this period. And I know there's some of you out there that are trading the S&P Crusher, and you might want to know if you can move to the swing trader. Absolutely, you can. With our website, with my company, we always want people to be able to trade whichever algorithm they feel is best for them. Again, we're not CTA, so we can't guide you and tell you trade this or that. We don't control accounts. All we can do is present the data and then let you make a decision on your own. So if you'd like to move to the swing trader, you can. And if you are on the swing trader and would like to move to the Crusher, you can also do that. Just keep in mind that it trades on 30K increments. So if somebody has 15K in their account, then they really can't trade the Crusher. They really need 30K, and that allows for enough buffer so that if we had our kind of max back-tested drawdown of about 30%, they could keep trading. But overall, I think that's the summary of how we've done the last couple months. I am going to try to keep doing these blogs a little more regularly, but I'm glad that we're finally caught up. And you know, the swing trader's done amazing. The S&P Crusher, it did okay. I mean, I think in January it still closed up, even though this looks like it just went sideways. If you take kind of the the final trade of January it was up a little bit, and then the final trade of March it was up quite a bit more. And so so far it's really off to a decent start. I mean, it's up about 10%, and we have all the trades here. You can review them if you want. Pause the video, rewatch it. But I think that summarizes it. So if you have any questions at all, please don't hesitate to call us. You can also email us. We can provide you with a live demo. And I'll just close with this final comment again on the risk of trading futures. That it's really not for everyone, but if you have a cash account or an IRA account, those both can be accepted. And we'd be happy to walk you through the trades, go over the history, answer any questions you have. And if you need personalized advice, then I recommend you talk to a commodity trading advisor or some kind of investment advisor. They can look at this and go over it with you, and you guys can talk about it and figure out if it's a good fit for you. But I think that's it, and so I'll sign off. But thank you so much for taking the time to review the trades, and look forward to doing another one in the very near future. Try to get back on the weekly schedule, but we'll see how my schedule permits. But we will for sure review the trades as we move forward, and we are very optimistic about 2017. It's been an amazing start, and so we look forward to hopefully continued success with our algorithms. Thanks a lot, and have a great day. Bye-bye.